Greetings. This is Justin Allen with the Elite Nurse Practitioner. Welcome to the Elite Nurse Practitioner Show, podcast dedicated to nurse practitioner entrepreneurism and achieving financial freedom, where I talk directly with nurse practitioners who need help. Listen up, our market is saturated. Jobs can be scarce. We are underpaid. We are undervalued. We are taken advantage of by the sharks within the healthcare system, and frankly, screw that. I'm sick of it, and it's time for a change. And listen, I'm here to help make that happen. We are powerful. We can forge a path where we are in control of our career and ultimately our financial and personal well-being. You do not need to submit to healthcare administrators and your doctor overlords. You do not have to take a measly salary. You do not have to work 50 to 60 hours a week. There is a different way, and I'm here to show you that path. This podcast is raw and unfiltered. I have not talked to the nurse practitioners in this podcast prior to the call outside of an email exchange to schedule the episode. What you're about to listen to is a consultation session between a nurse practitioner and myself. It is real, it is unscripted, it is unplanned, and I have no idea what we're going to talk about. Anything and everything can happen during our conversation. The nurse practitioners in these episodes are struggling with an issue in their professional or financial life, and they have reached out to me for help. My goal is to help the nurse practitioner with actionable advice that will enhance and improve their professional, business, and financial life. My other goal is to hopefully help my nurse practitioner sisters and brothers build a more productive, powerful, and free life. So I hope the content and information within these podcast episodes does just that. All right, onto the episode. Hello, everyone. Today we'll be talking to Nancy, who is a psychiatric nurse practitioner. Currently, she has her fingers dipped in multiple endeavors, including writing nursing educational material, working in an outpatient ketamine clinic, and she operates her own tele-psych business. She is currently building her business and is needing assistance with the financial aspects of her business and how to optimize her taxes. Hey, Nancy, how are you?
Good, thanks. How are you?
I'm doing good. Thanks for hopping on here. So let's jump into this. It sounds like you don't really need a whole lot of assistance with more, starting the practice and having running your business and whatnot. You sound like you need some assistance with some financial aspects of it. So tell us a little bit about yourself, how long you've been a nurse practitioner for, and what kind of things you've been doing.
So I've been an NP for a little over 2 years. About a little over a year ago, I started working exclusively in 1099 position as a telehealth NP in a psychiatric startup, which I still work for. And then I had a baby in December. And when I went back to work, I wanted to work in person as well, just to get out of the house. So I now work also as a 1099 employee doing ketamine and TMS, transmagnetic stimulation. And I've also this whole time been freelance writing. And I've just started to realize like what toll the taxes are taking on my finance. So I recently set myself up as an S Corp, and I'm still figuring all that out. But I've just found I've had a hard time getting the advice that I need, because it seems like either my situation is too nuanced or people can answer some questions, but not all of them. So I'm just sort of like trying to figure it out on my own, because I don't want to outsource too much and spend a lot on getting information that I need.
Gotcha. Okay. Well, I'm going to try to help you out here. So your business. So I'm assuming it's fairly successful. Can you tell us a little bit about just kind of how it's going?
Yeah, I mean, it's not a typical business in the sense that I don't market myself or anything like that. Like I said, I work for a startup, so they do all the I get all my clients through them. And then they pay me a portion of what insurance pays them. And then my other job, same thing. I'm getting clients through their practice. And so it's, and there's a high need for psychiatric mental health, and all of my work is covered by insurance. So I don't have any problem getting the work. And in fact, I probably could make more if I did more independent things. But so yeah, I'm doing well, but not in the sense of like, I think a typical business where it's really a volatile situation. It's pretty stable because I'm relying on others to do the business side of things for me, but probably not making as much because of that.
I got you. Okay. All right. So you have some income sources coming in from your job, your business, and then also writing the educational material, right? So you have 3 income streams?
Yes.
Yeah. Okay. And each one of these, it's a 1099 or your business is an S Corp.
Yeah, so that I just recently set up my pay so that my paychecks through the 1099 rules are going to be now deposited into my business account. And then I have a payroll set up to pay myself as the employee.
Right, right. Okay. So is this an S corporation or is it an LLC electing as an S corp?
I believe it's the latter. Although I didn't set it up myself because I got so confused. I had my father's accountant recommend someone who did it for me.
Well, is there LLC at the, behind your name for
No,
documents and stuff?
no, it's Nancy Pletcher, NP, PC.
Okay, so it's a corporation then. Okay.
Okay.
Yeah. Okay. So it's an actual corporation. So just for people like, listening and asking themselves what the hell's going on here. So you can either have just a basic LLC, right? A limited liability company. And with the IRS, you can elect to be taxed as an S corporation. The benefit of doing that is that the S corporation election it's just an election. You're still functioning under an LLC. And so the advantage is that you don't have to deal with a lot of the corporate documentation and the regulations that go behind the scenes with a corporation. Okay. So it's a lot easier to maintain. All right. A corporation, on the other hand, like an S corporation, typically there's a lot of filings you have to file with the state yearly that you don't have to do with an LLC. You have to have meetings and some various documentation and that sort of a thing. So it's a little bit more cumbersome to maintain. So first off, if it's actually a PC, a private corporation, an S corporation, not an LLC being taxed as an S corporation, ensure that you talk to the lawyer, the accountant, or whoever it is that set this up, and make sure that you're compliant with state filings and reporting and stuff.
Okay.
Okay. I don't know the specifics behind that. It's different with each state. Okay. So, yeah.
Well, I guess because my telehealth practice is seeing clients in New York, and I live in California, and my in-person obviously is in California. I'm licensed in both states. So that's a big hurdle that I've faced, is like finding an accountant. I don't have a lawyer and I don't even have an accountant yet. But finding somebody that understands, like, first of all, what even a nurse practitioner means. Like, a lot of people don't understand what that is.
Sure.
And then how to navigate like the crossing of state lines in my practice. Like and so that's been an issue that I've dealt with.
So do you have any idea what state that corporation's registered in?
California.
California. Okay.
Mm-hmm.
I believe in New York, you're supposed to have an actual entity registered there. So it could either be a professional corporation or a professional LLC. So I don't even know if you're even supposed to be seeing clients in New York State with a California PC, private corporation. Mm-hmm. So you need to make sure you figure that out as well. You're not doing anything like illegal. This isn't criminal. Okay. It's more or less just a civil slap on the hand. Hey, start doing it right kind of a thing. Okay. So I wouldn't lose sleep over it, but you definitely want to make sure you check on that.
Okay.
Okay.
So that would be with an accountant that I would have that conversation, correct?
Yeah. If they know. If they don't, then you're going to probably want to talk to more, just a standard business lawyer. They don't have to be a healthcare lawyer. Just a standard business lawyer would know that. Yeah. But I'm thinking that you probably are going to need to have that New York entity if you want to remain completely 100% compliant.
Sure.
Okay.
Yeah. Okay.
Yeah. When I had my telemedicine practice and we were in, over a dozen states, I just functioned under a single Wyoming LLC. I didn't bother forming PLLCs in states and all that kind of stuff. My lawyer basically told me was, it's not, you're not compliant from a regulatory standpoint, but it's not criminal. It's a slap on the hand. And what you're waiving when you don't have an entity registered in the state that you're doing business in, you're basically waiving your right to bring on legal action in that state. So you can't sue someone in New York.
Okay.
Through your business. Well, if you're not planning on suing anyone, then okay.
Okay.
Yeah, I didn't really care. So I was like, okay, whatever.
And
So
how did you find your lawyer or an accountant?
the lawyer is one of those things that trial and error. I wanted a lawyer that just gives it to me straight, not none of this. I need to look this up and yeah, that or this. And, some lawyers just sit there and go around in circles. I hate lawyers like that. So it's just calling various business lawyers and just talking to some until you find one that sounds competent.
Yeah.
Yeah. The lawyer I had was in Wyoming, though. So it's not going to really be applicable to your situation.
Okay.
Yeah. An accountant, same thing. I wanted an aggressive accountant. I wanted an accountant that is not scared of gray areas. Yeah. I don't want an accountant that's okay with tax evasion. There's a big difference.
Sure.
Right. But I want an aggressive accountant. I don't want an accountant that's scared and walking on glass all the time. And, that's not the kind of accountant that I want.
Right.
So it took shopping around for a good, aggressive accountant that knew what they were talking about, that knew tax law. Okay.
Yeah.
Accountants, you got to remember something about accountants. Accountants aren't really legal people. Okay. They're highly trained data entry specialists. Okay. A lot of them are. Like they just know how to input numbers into IRS tax sheets and QuickBooks and stuff like that. Okay. Finding a good accountant that actually understands tax law and can actually act as a tax strategist with you, that's rare to find, but they are out there. And you typically will pay more for those people, but it's totally worth it. Yeah.
Okay.
Yeah. So again, it's just shop. You got to shop around and trial and error. You got to interview these people. They're working for you.
Right.
Yeah. So, I mean, I would provide you my accountant's information, but he told me that he is not accepting any more clients. He is just overworked. So yeah. So you just gotta, you just gotta interview multiple accountants. Yeah. There's an article on the Elite MP website on how to find an accountant. So you can, you can look up that article. And I go over, some basic aspects of it. In the tax course, we go over quite a bit in detail, just FYI. So yeah, it's just interview multiple accountants.
Okay.
And some business lawyers as well. So anyways, I know we kind of went off of a little sidetrack there, but yeah, if you're being taxed as an S corporation, then correct, you're doing this, you're doing it right. So your 1099s and your business, all the money's going into this professional corporation. That's an S corporation. And then therefore, you need to be paying yourself a reasonable salary. And then everything else is taken out as an owner's draw. So you're doing that, right?
Okay.
So how much are you paying yourself?
$45 an hour.
Okay. Well, you know what? That's an average rate for nurse practitioners. So yeah, it's reasonable. It's a shitty average rate, but it is. So if you were audited, you could be like, well, this is what the average nurse practitioner gets paid. Yeah. So yeah, sucks for the average nurse practitioner, but good for the business owner that has an S corporation. Right. Exactly. So, so whatever's left over, are you paying yourself these as bonuses every quarter or something, or?
So I literally just set this up. Like I was paid this week and the day I got paid was the day that I also gave my two employers my business account information. So I haven't even been paid into my business account. So I paid myself into it. Like I put some money in that account. But one other thing I wasn't clear on, like with distributions, for example, does that just mean I'm transferring money to myself out of that account?
That's pretty much all it is. Yeah. And you just pay income tax on it.
I do pay income tax on it.
Yeah. The only thing the S corporation allows you to avoid is employment taxes, Medicare and Social Security.
Okay.
That's it. So, I mean, you say 15%. So I mean, it's a big savings.
Yes.
$100,000 is 15 grand, right?
Right.
Yeah. So, I mean, it's not chump change, but yeah, you still pay income taxes on the distribution. But yeah, you just transfer it over to your bank account. That's all I do. I don't even tell my accountant. He just sees it in the books and he says owner distribution, and then he gives me the tax bill at the end of the year.
Okay. And that's like what I've been doing, which is about a third of whatever it is going to be. I'm going to owe in taxes.
Yeah. So what I would do if I was you is that when you transfer that over to your personal account, to live off of or whatever, buy yourself whatever it is that you want, have another account and just get into the habit of just putting 30% of everything into it. Yeah.
Yeah. I do have like a tax checking account where I just put all the tax money.
Okay, good. Yeah, just keep doing that. Put that 30% in there. If you do that, at the end of the year, you shouldn't have any surprises. I mean, 30% from my experience, 30%, it's typically pretty damn close. Like I'll get the tax bill at the end of the year from my accountant and it almost matches that 30% that I put away.
Okay.
Yeah, it might be a little bit less, might be a little bit more, but it's usually pretty damn close. So so you should be okay.
Okay.
Yeah.
Perfect.
Yeah. Don't touch that money. You know what I mean? Never touch it money. Some people will start dipping into that. And it's just like, nah, that's Uncle Sam's money. So if you don't like seeing that money in your, in the account, I mean, if you start generating a lot of money, $300,000-$400,000 a year or whatever, that's going to build up pretty quick and you're going to have a lot of money in there. If you don't like having that kind of money in there, you could also set up quarterly tax payments and just pay the IRS every quarter and be done with it.
Well, I have to do that or I would get penalized anyway, right?
It depends. There's a few factors. It depends on how much you make, depends how much of it's passive. There's a bunch of rules surrounding it. I don't know every single exact rule around it. Yeah.
I've just been paying once a month, honestly, because I don't want to look at it.
There you go. Just do that. Just pay out. Just pay it and be done.
Yeah.
And then at the end of the year, you shouldn't really have a tax bill.
Yeah, it's less painful.
Exactly. I'll tell you what, writing a big 6-figure check to the IRS it's not fun.
No. Yeah.
I've done that a few times. It's nauseating. It pisses me off for multiple days.
Yeah.
I'm in angry mood and I drink a lot those few days. Like, yeah. So, but anyways though, okay. So do you have any questions about that, the S corporation election and like the logistics of the taxes?
No, I think it's just that I need to find a good accountant, which is what I've had a hard time doing. Like somebody who can answer these like silly questions that I have. But I just have to keep looking, like you said, and just, trial and error.
Pretty much.
Yeah.
That's pretty much what you got to do. Yeah. I mean, and sometimes you find a great one right from the get go, but oftentimes it takes a little while.
Yeah.
Yeah. Yeah. Okay. So any other tax questions?
I don't think so. I mean, I have questions, but I feel like they're probably accountant questions. So I can save those.
Okay. I mean, you can shoot over a couple of them to me if you want. I might be able to answer them, but
okay. Like an example would be that this weekend I went through all my expenses through all my accounts and started a spreadsheet of what I think maybe including questionable things that could be included as write-offs. For example, I have a premium membership to YouTube, which sounds really like trite, but I actually use it quite a bit for research. Like I watch a ton of lectures, like a lot of the big universities will post their lectures or
sounds like a continuing education expense to me.
Yeah. So that was one question.
Have you taken our tax course? It's 6 hours long and it goes over every single deduction you could possibly imagine, but that's a continuing education expense.
Okay.
Yeah. Okay. Yeah, for sure. You could definitely write that off. Why couldn't you? Yeah.
Okay. Cause I just feel like, well, if I were the IRS and I saw YouTube on a Psych NP's tax return, I'd be like, what the hell? How are you trying to write off YouTube? But
then you explain it and I mean, as long as you can explain it, there's always.
If you look at my YouTube history, you would see that it's like nerd central. Like it's just all educational stuff.
Right. So there you go.
Sounds like probably like I don't know. It just, I was like, I don't know if that's pushing it a little bit.
And Nancy, I highly doubt they would go that far into it.
Okay. I'm probably not making enough money to be that interesting to the IRS. The chance of being audited, is 1 in 100. Okay.
Okay. 1 in 100. So that means you can file 100 tax returns and you'll probably be audited one time.
Mhm.
I hope you live to be 120. Okay. I probably won't. So, I'm not, I'm not too concerned about it. I've talked to multiple tax attorneys and accountants and stuff, and they're just like, having an audit it's not a common thing. Most people get audited over dumb shit, like writing off 100,000 miles, and you know, you're an engineer or something. Like, explain how you wrote off 100,000 miles. Like, I knew a realtor in town who wrote off something ridiculous. It was like 145,000 miles or something crazy. Her car didn't even have 145,000 miles on it. Like, she got audited and yeah, she got fined and stuff. Okay. My accountant has told me they hang the pigs, but they slaughter the hogs. Okay. Don't be a hog. Like, just, you're going to get slaughtered. Okay. Yeah. Like, yeah. So you just don't be ridiculous. And even if it is an audit, it's usually something kind of minor. All right. I hope everyone's enjoying the episode so far. I just wanted to take a quick break to thank everyone listening and also give a big thank you to all of my social media followers and email subscribers. If you haven't done so yet, please subscribe to our email list at www.elitenp.com and make sure to follow us on Facebook, Instagram, and LinkedIn. Email subscribers will receive updates on new weekly podcast episodes, multiple weekly articles we publish, new courses, and everything else related to helping you succeed. Remember, all elite nurse practitioner courses are designed to help you build a niche practice, increase your financial strength, and to break free from the rat race. If I can break free and then other countless nurse practitioners can break free, then so can you. Additionally, please share this podcast with your other nurse practitioner sisters and brothers out there. The more NPs that venture out on their own, the stronger our profession will become. Now, let's get back to the episode. Like, a number was off, or you forgot to, let's say you got paid $1,500 for some sort of, I don't know, let's just say you wrote a chapter in some nursing book or whatever, and they paid you $1,500. Just complete example here. Okay. And they wrote you a check for $1,500. They sent you the 1099 form at the end of the year. And you completely forgot to get that to your accountant. And then an IRS agent, they go through their algorithms and they're like, okay, wait a second. We got this $1,500 1099 from this employer, but yet we're not seeing this being accounted in her taxes. That would trigger an audit.
Okay.
It was a bookkeeping error.
Right. Okay.
Yeah. So that's why you got to have a good accountant that's making sure that they're keeping track of all this stuff. Right.
Right.
But a lot of tax attorneys have told me too that they usually don't bother going after people unless it's like true 7-figure kind of tax return stuff, because they want the big fines, and someone making a couple $100,000 a year. It's not a big enough fine for them to justify spending a lot of time. Right. Exactly.
Yeah. Okay.
Another thing too is that the typical IRS agent is, getting paid $45,000 a year. I mean, they're just people, it's just a job.
Yeah.
I mean, they're people.
Right. Yeah. That makes sense.
They're not going above and beyond here.
And how do you split your questions that you would ask like a tax lawyer or a business lawyer versus an accountant? Like, what is the role of each?
Well, the business lawyer is going to be more, I mean, a lot of it overlaps, right? From what I have found with accountants is that truly only tax matters are really what you should be asking an accountant. Accountants understand the tax implications of legal entities, but they do not understand the regulatory issues behind it, the liability, the asset protection provisions. Like, they don't understand that stuff.
Got it. Okay.
So just, in your mind, taxes, CPA, everything else lawyer, basically.
Okay.
Now, some CPAs know a lot of stuff about this other stuff as well, asset protection and regulatory things. And, every professional is different. I mean, I'm a nurse practitioner, saying I'm sitting here talking to you about taxes and financial stuff just because I'm a financial nerd.
Mm-hmm.
Right. But I'm not a CPA, nor am I a lawyer. Right. So that's the same thing with a CPA. Like a lot of them know a lot about law. They're not necessarily expert about it.
Okay.
Yeah. And then trying to ask a lawyer about taxes, what a waste of time, unless they're a tax attorney.
Okay.
Yeah.
Okay. Got it.
Any other deductions that you've had questions about?
No, that was my big one where I was like, this seems ridiculous. I guess, well, so this isn't a weird question, but I have gotten Botox. I'm going to be 37 years old. I've gotten Botox since I was 30. And I recently set up an account to buy it as a provider. I'm really under my business and I'm really not planning to do much with it from a business standpoint, but just to save money. I don't even know if I can say this, but is that too far from what my other work is to be considered part of my business?
I mean, if you're providing it to patients and using it for business, then it's a business expense.
Right.
If you're using it for yourself, then no, that would be considered just something bought through your business that you provide patients, but you're also using something of it yourself. So you would, 30% of it would be just, the cost of it would be considered an owner's draw, basically.
Okay. I thought you can't do owner's draw on S-Corp.
Like an owner's draw, just a distribution. Yeah.
Okay.
I mean, yeah, that's kind of what I meant.
Okay. Got it.
Yeah.
I think that was my only other. What about my contributions to my own retirement? That would not be a write-off, right?
No, that's a complete write-off. It's 100% tax
Really?
deduction. Yeah, it's a tax deduction. So
like my Roth IRA?
Roth is going to be post-tax dollars.
Right.
Right. So you'd have to have so if you're going to start funneling money into retirement accounts, 401ks and IRAs, you need to have self-employed 401ks, IRAs. Okay. Not a Roth. So a Roth is post-tax money. Okay.
Oh, okay.
Yeah. So you pay taxes on it, then you put it in the Roth, then it sits there and grows tax-free.
So if I'm contributing to the Roth, from my personal account, which is getting paid as an employee, that I can contribute to the Roth, correct?
Correct. Because exactly. Because it's already taxed.
Right.
Right. Now, if you want to truly maximize your pre-tax retirement contributions, if you want to maximize that, then you need to open up a SEP IRA. Okay. A self-employed IRA.
Yeah.
Because you could put $60,000 a year into that tax-free.
And is there a max on income for that? I know there is for Roth.
No.
Okay. Got it.
Yeah. Like I put 62,000 or 63,000 or whatever the hell the max limit is into my IRA every year.
Got it. Okay.
Like that builds up really quick.
Yeah, absolutely.
10 years, it's $1 million.
Yeah.
If you just moderate conservative investments, you don't have to be crazy about it.
Okay.
Yeah. So you really need to be looking into that because it'll lower your taxable income significantly.
And are you, would I be funding that from my business account directly?
Directly, correct. So you'd open up an account with Charles Schwab, for example, JP Morgan or whatever, and you would create a SEP IRA account. And then at the end of the year, your accountant would do their taxes and everything and be like, okay, if you contribute this amount to your SEP IRA, it'll lower your taxable income by this amount. So for example, if you max out your SEP IRA, if you put $60,000 into it, it'll lower your taxable income by $20,000. So basically you got free 20 grand.
Okay.
Yeah.
And do you tend to do that throughout the year or do you do it at the end of the year when you're doing your taxes?
I just do it at the end of the year.
Okay.
Yeah. I just let the money build up. I don't, I have fairly low expenses for how much I make. And so my money just builds up.
Right.
Yeah. Like I put it into like, a high yield savings account or some short-term treasuries or something and earn some interest on it. And then I make sure to pay myself out that, before tax, after tax time. And then I put the money into the SEP. That way I earn, a little interest on it.
Got it. Okay.
Yeah.
Yeah, that makes sense. I have a high yield savings. Okay.
Yeah. Yeah. And, right now too, with treasuries, treasury yields, interest rates right now are going to, in my opinion, and the opinion of a lot of professionals and experts, they're going to stay this high for a little while. Okay. Inflation's still somewhat high. It hasn't, gone down significantly. So the Federal Reserve is going to maintain interest rates at a higher level for probably the next few years. Okay. Mm-hmm. So what that means is that any kind of cash that you have, it needs to be out of your bank account. It could be in a high yield savings account, sure, but you could probably earn more. You could probably earn about a full percentage point more if you put it into just some short-term bonds, some short-term treasuries. So that's what I do. So I buy short-term treasuries straight from the IRS, or not from the IRS, from the U.S. Treasury. These short-term treasuries, they have expiration dates of 6 to 12 months, and the interest rates on them are 5.5%.
Oh, wow.
Right. You can't beat it. It's free money.
Yeah.
Put $100,000 into it. You just made, $5,500 over a year for doing absolutely nothing.
Right. And that's something that you can liquidate easily?
Yeah, 100%. You can just sell it off.
Okay. Yeah.
They're pretty high liquid assets. So if do you have a brokerage account?
Yes, I do.
You have a brokerage. It's a post-tax brokerage account? You can just put money into it and buy stocks and stuff?
Mm-hmm. TIAA is what I use.
Okay. So there should be an option. They should have a treasury, a bond exchange through it. I'm not familiar with that brokerage. But I know with like Charles Schwab, TD Ameritrade, Vanguard, Fidelity, those brokerages, there's a treasury, there's like a treasury exchange in there, and you can buy bonds directly through their sites. And that's what I do.
Okay. I have to look into that. Yeah. They were where I had when I was still a W-2 employee or W-9, whatever. I'm confused by those, but no, W-2. When I was a unionized nurse, that was where my 403B was. So just to kind of like minimize where all my money is, so it's not in too many places, I just started my brokerage account with them and my IRAs as well.
Okay, so just get in there and play around. You should be able to see something about buy bonds, buy.
Yeah, I'm putting that on my little notes that I'm taking here.
Yeah. All your cash should be in those. I put all my money in those short-term bond treasuries right now. It's foolish not to.
Yeah, and I guess like I know that we don't have a ton of time left, but I think like part of this is that eventually I do want to be like have more passive income. Like I love my clinical work. I love all my work and I like working. But I'm a mom and I'll probably have more kids. And I do want to have like that balance where I'm like really optimizing my income and not at the mercy of like constantly needing to make more money. I just want as much flexibility with my schedule as possible.
Yeah.
And like, I want to be as smart with my money as possible because I am a minimalist with spending. I'm really good about that. I have no credit card debt or anything like that.
Good.
But ultimately, like right now I'm just building the business and trying to educate myself. But ultimately I really want to be like, have it kind of be a well-oiled machine where I'm a little more independent and not just on the schedule every day.
Yeah. Oh, I mean, yeah, that's the goal, right? You said you're 37.
This month I'll be 37. Yeah.
Yeah. Okay. So you're a couple of years younger than me. So I had passive income streams at that age, but the passive income streams really started developing for me over really like about the last year or so.
Okay.
And that's because I invested a lot of my money into things that would provide the passive income. And I kind of, I rebalanced my portfolio, so to speak. So, you have growth investments and then you have more of like the income investments, right? And so, at your age, it really depends on what your goal is, right? So like, do you want to be 40 years old collecting a check every month that you could live off of? Or do you want to have an income stream that, maybe it's your business or like a part-time job or something, and then your money's invested into certain investments that just grow over a longer term period,
Yeah.
10 years, 15 years, 20 years, whatever. And then you cash out at the end of those 10, 15 years and then put it into more income-based investments. So what is it that you want? What is it that Nancy envisions in a couple of years?
Well, my husband's a surgeon and he'll be a fellow. He's a fellow now and he'll be an attending. So once we find out where he'll be working, we'll purchase a home. We're still renting. So I want to own a home. I want to minimize my childcare expenses because that's extremely expensive.
Oh, yeah.
And by doing so, be more available to my children. But also like for my own well-being, I need to work. Like I need to use my head. I need to be among adults. I need to be learning and all the things that being a psych NP allows me. I'm extrememly interested in neuroscience. So I don't know exactly what that looks like. And I do love the companies I work for. They have great cultures. They're super supportive. And I'm not really interested in like self-marketing because I'm a little shy in that way. Like I don't want to be posting on social media and all that but at the same time, like I don't know exactly what those income streams would be that would require less of my active participation on a day-to-day basis. But I do hope that I find like outlets for that, whether it's through my writing or something else, where I have the flexibility to like be a mom and be available to my kids, minimize that expense and generate income to support our family and like have a nest egg for my kids and have safe retirement. So I know that's a really vague answer, but I feel like things are like the snowball is building of my career. And I'm not exactly sure how I'm going to do this, but I just think I'm going to keep building bridges and, I have great working relationships and kind of see where it takes me. But ultimately, yeah, like I want to have a higher yield income and more flexibility with my time.
I got you. Okay. So then your husband he's a surgeon, so he's going to be making a pretty decent living in a couple of years, I'd imagine. So if I was you guys, I would set a hard date of like, when do we want to sort of just step away and begin, living life to the fullest, right? What age is that? Or when do we want to cut down to part-time work and start living more life versus working?
Yeah.
Right? So I think you should have to have a conversation with your husband about that. Like, when is that? The thing is that, you're only young one time, right?
Yeah.
So, you're 37, I'm 39. And like, I'm to the point now where I'm like, I don't want to continue to hustle and work super hard right now. I want to live life. Like I'm getting older. I can start feeling it a little bit. You know what I mean? I'm not 25 anymore. Like I feel my knees and shit now, like, you know what I mean? Like, oh, my back, like, like I feel age. And so I want to live life to the fullest now. And so I am cutting back significantly on work overall because it's time for me to live life. What does that mean 10, 20 years from now? From an income standpoint, I should still be okay because, I've built a significant nest egg. I have some passive income streams coming in from some businesses. And so I should be okay. And so what I would do then is that if you still have a few more years of hustle in you, what I would advise, you do. You're still young, you're still energetic. So you got a few more years of hustle in you, right? But you do have a young child too. So you don't want to lose those precious years either, right? So you got to find that balance. You got to do that hustle. And I would say every dollar that you pretty much make, I would invest almost everything that you possibly can into some higher risk, higher growth kind of things because you don't need the income right now. Okay. There's no reason to be investing in stuff that pays, a dividend every month. It's not really necessary in your case because you don't need that cash flow right now. Like, what would the benefit be of you putting $500,000 into something that pays 4% that doesn't really grow that much? Okay. The principal that $500,000 doesn't grow that much. It doesn't really appreciate much, but it's spinning off 4%. which is $20,000 a year. Is that $20,000 going to move the needle in your life? Probably not that much.
Yeah.
Right. Because you have income coming in, your husband has income coming in. So like, what are you gonna do with that $20,000? You're just gonna reinvest it. I mean, what else are you gonna do with it? Right. So that's what I'm saying. I would say focus more on high growth sorts of investments. So that's going to be more of like the main companies in the S&P 500, for example.
Right.
You know what I mean? Ones that really don't pay dividends, but that grow. So that's what I would be doing. I would avoid real estate right now. In general, it's overinflated numbers. It just doesn't make sense.
Yeah.
I can't find real estate deals right now that actually make sense. They just don't. It's overinflated. So, that's just gonna be one of those things that real estate might not be that great of an investment for 10 years or something. Who knows,
Okay.
Yeah. So that brokerage account, putting your cash in bonds, leave it in there, or high yield savings until you figure out what it is that you want to do with that. But if I was you, I would just pick a couple high growth exchange traded funds, index funds, and just be dumping your money into that. And you and your husband, sit down and say, hey, by the time we're 45, we're 50 years old or whatever, let's cut back part-time, 10 hours a week or whatever, and let's live life. And if that's your goal, then, 15 years from now, 20 years from now, you should have that you should have a very large nest egg that will provide you that, right? That'll give you that ability to do that. So that's what I would do.
Okay.
Yeah. And high growth index funds, VTI, the Vanguard Total International Stock Fund, basically, like, VXUS, that's an international stock. VTI is just total stock market index. So basically, if you put all your money into VTI, that exchange traded fund, it's investing investing in the entire stock market. So it's very diversified, but it's growth focused.
Okay.
Or VOO, VOO.
I have VOO. That's most of my money is in VOO.
You can just continue dumping money in VOO then.
Oh, okay. Okay.
That's pretty much all you really got to do. You don't need a complicated portfolio. You really don't. Like, my portfolio is somewhat complicated. I got about a dozen funds or so, but I'm focused more on cash flow right now for me.
Yeah.
I want an income to live off of. Like, I've been building my nest egg. I want more of an income now. So so it just really depends on when is it that you want to start living versus working.
Right. Okay.
Yeah. So,
right.
Any other questions?
I don't think so. Not at this second. I mean, you gave me a lot to think about, and I feel like I have some action steps I'm going to be taking. So I appreciate this. I appreciate your time and all your insight. You know a lot.
You're welcome. I don't know if you've ever listened to a podcast before, but I like to end the episode with you asking me a question. It could be a personal question or more of a curiosity or something like that. It's kind of something outside of this, business stuff. If you had a question.
How about this? I always ask my clients this: what's a normal night of sleep for you?
Oh, well, considering that I have an 8-month-old right now, not good.
Me too.
8 months?
Yeah, she was born December. Well, she'll be 8 months, December 23rd.
Oh, wow. Okay. So my son's about 3 or 4 weeks older than your daughter. Yeah. Okay. Some days it's great. Some days I'll get a good solid 8 hours of sleep, and then some days it's 3. Yeah. But before that, I slept pretty good. I would usually get a good solid 7-8 hours of sleep usually. Are
you a night person or a morning person?
Oh, morning person. I'm up at 5.
Same. Yeah, me too.
Yeah. I can't. 8:30, 9 o'clock. I'm perfectly happy being in bed at 8:30.
Me too. Yes.
Yeah. All right. Well, cool deal. Well, listen, I appreciate you hopping on here. I hope this was helpful. And if you have any other questions,
thank you for your time. I appreciate it. It's very generous of you.
All right. You're welcome. You take care of yourself.
Okay. Bye.
All right, bye. All right. I hope everyone enjoyed the conversation with Nancy. There was a plethora of just solid information there if you are trying to navigate, the finances in your business, in your personal life, tax considerations, those sorts of things. For most of you, you don't need a professional corporation. I think it's overkill. She's in California, so I believe you have to have a corporation in California. So I think that's why she has that. But in most states, just an LLC electing as an S corporation is the best way to lower your tax obligations from an income tax standpoint. So consider that. And also be considering, when is it that you want to start stepping back from work? You got to make your money work for you. You just do it. So you have to be investing your money all the time. You have to live below your means. Living way above your means and having a mortgage that you truly can't afford and having all these bills and all these debts, that's no way to live. You're a slave to money. You're a slave to your income. You want to get to a point where you can just walk away and you don't need that check. You would be fine for 6 to 12 months, okay? So anyways, I hope everyone enjoyed this episode. Lots of good information. I'd advise listening to it again if you really need a good finance and tax 101. All right, thanks. Talk to you guys later. Bye. Thank you for listening to the show. Quick legal disclaimer. The content of this podcast is meant for informational and entertainment purposes only and should not be used as legal, financial, medical, regulatory, or practice-specific advice. For information pertaining to your specific legal, financial, medical, or practice-specific needs, please be sure to consult with your lawyer, CPA, medical director, and/or your state's practice laws and the most up-to-date clinical guidelines. As always, do your due diligence when it comes to any information found online and in podcast. The content in this podcast is copyrighted by Galaxy Medical Southwest 2023 and cannot be duplicated, rebroadcasted, or reproduced without our written permission.